Hi guys, welcome back to Web3 Daily. Today's vibe across the market? One word: fire. Bitcoin's cruising above 118K, bulls are in control, and the real fireworks came from Ethereum. ETH exploded out of nowhere, spiked past 3,500, gained over 20% in a week, and dragged a whole bunch of altcoins along for the ride. Let's break it down. Bitcoin is holding steady at 118K, still riding the momentum from 10 straight days of ETF inflows, around 8 billion in total. Big money is definitely here, and it's lifting the floor, but on-chain metrics are flashing overheated, and we all know what happens when everyone thinks we're geniuses. Now ETH, today's MVP. A single power candle pushed it past the previous resistance level, breaking 3,500, hitting a yearly high. And everyone's talking about an ETH spot, ETF approval coming in August. One fund saw 700 million in net inflows in just one day. People are calling for 10K, even 14K by year end. We'll break all of that down in a minute. Alts are flying too. XRP? Absolute monster up. 6% today, 27% on the week. Rumors of an XRP futures ETF are back on the timeline, and the market's biting. SOL is ripping too, climbing past 170 after a whale grabbed 55M worth in just 2 hours. DOGE climbed 6%, reclaiming the 0.21 mark. TON's chilling around 3.16 quiet, but it's already up 4x this year. What we're seeing now is clear rotation. BTC led the charge, ETH just flipped the switch, and now money is flowing into alts. 1 month ago, people were praying for a bull run. Today, the OGs are all in, and new money's already chasing. That doesn't mean go full ape, though. Markets don't move in straight lines. Pullbacks come fast and ugly. Manage your size, protect your stack, and keep your head clear. So yeah, Ethereum's breakout wasn't just price action. It flipped the whole mood of the market. KOLs on X are hyped. Arthur Hayes says Ethereum season is here and threw out a 10K target. Not just talk, he posted the ETH. BTC chart showing a full trend reversal after 2 years of bleeding. OG analyst Crypto Patel went even further. He said alt season isn't coming, it's already here. He's projecting a 5 trillion market cap for altcoins this cycle. But it's not just speculation. 700M in daily inflows to ETH funds isn't a vibe, it's capital. Institutions are rotating, and they're not being shy. Legacy finance is backing it too. BlackRock, Fidelity, Standard Chartered, they're all in. Standard Chartered even said ETH could hit 14K by the end of the year. That kind of bullishness used to be reserved for Bitcoin. Now it's ETH's turn. Of course, not everyone's convinced. Some are saying this spike feels like bait. When the whole timeline is bullish, it's often the top. A few skeptics are asking, weren't you all saying ETH was dead just last week? Thing is, this time feels different. The ETH leaving exchanges is real, the whale buys are real, the institutional flows are real. If this is a trap, it's the most expensive one we've seen. Short term, maybe it cools. But the spotlight's on Ethereum now, and BTC's no longer the only main character. Over in Washington, crypto legislation finally broke through gridlock barely. The US House was stuck in procedural limbo until late last night when Republicans made a trade. They added anti-CBDC language to the defense bill to win over libertarian votes. That unlocked support to push 2 critical crypto bills to the final voting stage. The Market Structure Bill and the Stablecoin Oversight Bill are the pillars of US digital asset policy. This week, the House will vote on the Stablecoin bill. If passed, it'll be the first federal-level law regulating dollar-pegged tokens. This bill mandates full reserve backing, regular audits, and federal oversight-moving regulation from the SEC to the banking system. That's a huge shift, and it opens the door for stablecoins like Ripple's RLUSD to thrive. The Market Structure Bill comes next week. It'll formally define which assets are securities versus commodities and clarify the rules for crypto exchanges. If passed, it gives the US crypto industry its first real legal framework. This isn't just bullish, it's transformative. Clear rules mean less regulatory chaos and more confidence for institutional players. ETH's recent pump? Yeah, this legislative clarity played a part. Sure, there's still resistance. Some Democrats say the bills are too industry-friendly, but it's election season, and Republicans are chasing the crypto vote. The momentum is real. Bottom line, if the stablecoin bill lands, expect more compliant USD tokens, cleaner payment rails, and serious growth in on-chain finance. The regulatory narrative just got real. Meanwhile, Trump's family just voted to unlock trading for their WLFI token with a 99.94% approval rate. Yeah, the same token that's been sitting idle since launch. And guess what? Trump's clan owns 22.5% of the supply over 15 billion tokens in Trump's personal wallet. Once trading goes live, that bag becomes liquid gold. Pre-sale rounds already netted them around 500M. Now with open trading, the Trump fam stands to profit massively right as Trump sits in the Oval Office. Democrats are losing it. Elizabeth Warren's already waving the conflict of interest flag. Trump's team claims the tokens are in a blind trust, but no one's seen the fine print. This is more than just optics, it's a blueprint for how politics and crypto might collide. A sitting president's family launching and holding a pumpable token? That's not just weird, it's potentially corrupt. From a trading perspective, WLFI could moon short-term. Trump's base will buy anything with his face on it. But if this becomes a trend, we're heading into full-blown political casino territory. And that's not bullish for anyone. Next up, Talos just made a power move. They spent over $100 million to acquire Coinmetrics, the on-chain analytics OG. This is big. Talos handles execution and portfolio tools for institutions. Coinmetrics brings chain data, pricing, and index services. Now, it's all in one package. The goal: a full-stack platform where hedge funds and asset managers can analyze, trade, and track their digital portfolios without needing 5 separate vendors. Talos' CEO said it straight: the big guys want one solution, not a mess of APIs. With this deal, Talos becomes the Bloomberg terminal of crypto clean, powerful, and ready for prime time. This is consolidation season. Infra providers are merging, gearing up for the next wave of institutional capital. Smaller players might get wiped out. Institutions, they'll love it. In short, Talos just leveled up, and the bar for crypto infra just got raised. And just when you thought that was enough, Coinbase dropped a bomb. They rebranded Coinbase Wallet to Base App, and it's not just a new name. It's now a full-blown super wallet, messaging, payments, social feed, and dApps all in one place. Base App runs on their Layer 2 chain, which just got turbocharged from 2-second blocks to 0.2 seconds. That's real-time UX, baby. They also launched Base Account and Base Pay. The first gives you a smart wallet and cross-chain login. The second lets you pay with USDC at Shopify with 1% cashback. And the craziest part? No new token, no gimmicks, just product. This is Coinbase going for the next 100 million users. They're not just building a wallet, they're building the bridge from normie to degen. And if they get it right, this could be their biggest move since going public. Speaking of big moves, Cantor Fitzgerald is reportedly buying 30 BTC. Yes, 30k coins. That's 3.5 billion worth. From none other than Blockstream CEO Adam Back. The plan? Inject those coins into a SPAC, rebrand it as a Bitcoin holding company, and then raise another 800 million to buy even more BTC. It's MicroStrategy too, but with a SPAC. Cantor's boss is a US trade official. His son runs the SPAC. This is political and financial firepower consolidating Bitcoin at an insane scale. Markets loved it, SPAC shares jumped 25%. If the deal closes, those coins get locked up, supply drops, bullish pressure rises, and institutional control of BTC grows stronger. Forget ETFs, institutions are now building their own Bitcoin vessels. And while retail scrolls memes, whales are buying the future. One last headline: Bitcoin got hacked for 27 million. A hot wallet exploit drained BTC, ETH, SHIB, DOGE, USDT, SOL, and more. But credit where it's due. Big One responded fast, paused withdrawals, and said they'll fully reimburse users. Still, it's a wake-up call. Even centralized exchanges aren't bulletproof. One breach, and tens of millions vanish. Users got lucky this time. Next time? Who knows? For now, the market shrugged it off. SHIB barely moved. That tells you where we are bullish sentiment is, overriding fear. But don't get too comfortable. Trust is fragile, and even one breach can ripple wide. Alright, today's takeaway: rotation is real. ETH's got the mic, alts are warming up, institutions are stacking, builders are building. The new cycle is here. Don't get lost in the noise, focus on structure, watch the flows, play your game. Web3 is not just alive, it's evolving. See you next time.